Welcome to News You Can Use, presented by Supreme Lending. News You Can Use offers timely information related to the housing and housing finance industry that we believe will benefit you and your customers. This is News You Can Use.
I have some news that you can use. That's right. If you want to participate in making the world a better place, try this out with me. Be for everyone. You still don't have to be for everything, but you can be for everyone. It says in scripture that a nation divided cannot stand. Well, a house divided cannot stand. Your home and a business divided cannot stand, and our country divided cannot stand. So just think about it philosophically. Adopt it with me. Be for everyone. You could still not be for everything, but be for everyone. All right, let's get into some news about what's going on with the economy, specifically what's happening with COVID-19 and its effect on the economy. As all of you know, we induced a COMA and shut down the economy back in March of this year. The intention was to flatten the curve. A reminder, this is a virus. It doesn't go away. So we were attempting to flatten the curve because at the time we were ill prepared. The hospitals, the equipment that we were going to need. Certainly we don't have a vaccine and aren't going to have one anytime soon, but we didn't know how to treat it. So what we wanted to do was to give our medical community two things: a bit of time going in so that we didn't overrun the hospitals. And then the second thing, we wanted to delay and still do flatten the curve and delay as long as we possibly can so that our medical field can improve treatments and work their tail off to get us a vaccine. So let's talk a little bit about what happened. We shut the economy down and then we pushed the restart button. That started around May, and not all of the states opened in May. A number of the states, particularly in the South, where the news about COVID is, well, let's just say it's really the big news right now. But we restarted. And of course, all of us were a bit relieved that we did. That our business, by the way, has been great all along. So thank God for that. But for our neighbors and friends and other industries, I think we were all cheering that restarting was good. That did not signal it was the end of COVID by any stretch of the imagination. It simply meant that we were going to start moving back to a bit of normalcy for all of us from an economy standpoint. And then we had a lot of work to do to get a recovery. We talked about the shapes of the potential recovery that would take place. And of course, we all want there to be the V. That would be the victory. And that is that we shut the economy down, we turn it back on, and we go right back to business as it was prior to COVID-19, which was the best employment market that this country has ever had. 3.5% unemployment. We were seeing growth in the economy that was very good. We were generally in an incredibly healthy economic circumstance. But when you shut the light off like we did, we went all the way down. We lost 40 million jobs in 8 weeks. Of course, turned it back on, restarted it, and hope they'll all come back. It's not quite what we're seeing right now, but we want the V, right? We're hoping for a V. Then there's the possibility of a U, and we'll take that too. A U's a good recovery. We go down, stay a little while, and then we ease our way back up. Last week, we introduced the concept of a W. That's not what we want, a W. A W is that we go down, we shut it off, we turn it back on, come up, which is kind of where we are today. And then because of COVID-19, we have to back off of the restarting of the economy. We have to shut things down again, and then we go back down only to at some point down the road, maybe come back. Not what we want. The swoosh, it's kind of our third option that we would want, right? Which is we go down and then we have this gradual recovery. The last option, just like the W, the last option that we want is the L, which is that we go down and we simply never recover. So let's see what we're watching, what we've been watching. And most of it is that we're focusing on those areas that essentially did get shut down, because not every part of the economy got shut down, but certainly what we know is true is that the restaurant industry and the hotel industry, what we know is true is that we also took air travel down from like 100% to 10% almost overnight. We shut down sports, professional, hopefully not college coming up here soon, concerts, theater, anything where people are congregating, we shut those down. So what we're watching now is we're watching Apple and their app that tells us about movement of people, because we saw a substantial decline in the movement of people early on, and that's starting to improve a bit. What we're seeing as well is that restaurant bookings are up. They're flattening out a bit now, which is kind of expected, because there are a number of people that simply, because of their age or concerns or just in fear in general, just not simply ready to go back to business as usual just yet. Some may never go back to business as usual. The hotel occupancy rate is picking up a bit, so people are starting to get back into a bit of a flow. Of course, this is also helped by the fact that we're at summertime. And even though the kids weren't in school, people do accustom themselves to getting in the car or getting on a plane, going to the beach or wherever they favor to spend time with family during the summer. So air travel's picked up a bit, certainly is way behind from where it was when we started. If you look at these numbers from where we are today, from where we started, the air travel business is down about 80% still. So it's got a long way to go to recover, but at least the direction is starting to make progress. Home purchases, we all have been extraordinarily blessed. The economy got shut down and our industry was shut down, but not for long. About a 2 to 3 week period of time, it went down, and I'm sure all of us held our collective breaths. But then we saw a quick turn, and since then, we've been in one of the very best housing markets. That is, since around the beginning of May, we've seen every week progress get made. And of course, this is the time of year that is summertime when we do an awful lot of our business. But it's been a blessing to be a part of the housing industry, because we are one of the few industries that actually looks like a V in terms of recovery. Let's go to the big news that's going on today. And I'm not a physician, but I'm also not in the media. So I don't try to sell anything. I'm simply trying to offer you news that you can use in your business and with your families every single day. We are all inundated now with the media telling us that COVID-19 cases are setting records in our country. Those are facts. There are increasing cases, almost seemingly records being broken by the day. But if you look at the other charts sitting side by side, and you will see then that the number of cases is on a steep incline right now. But the other line that you're looking at is what we all really fear, right? I mean, getting sick is not fun. I've had the flu before. I'm sure you have as well. Even getting a cold isn't fun. But what most of us are really concerned about is getting hospitalized. And even more concerning would be, of course, dying from this disease called COVID-19. And what we've seen is a tremendous decline in death rates. So now the question is, as we hear in the media, the number of cases, the record-breaking cases going up, are deaths going to follow? It's our opinion that they will not follow nearly at the rate that they did early on, and for several reasons. One, the average age of the new COVID confirmed case is much younger than just 3 months ago. That's one. Second, the treatments, even though it's only 4 months into COVID, are just substantially improved from how we were treating people to start with. And of course, we're not sending people from the hospital with COVID back to nursing homes any longer. Just a bit of our learnings, of course, in this process, painful lesson, but there's been a lot of painful lessons so far in this process. It's been a tragic process for all of the folks that live in America, and specifically for those, our hearts go out to those that have lost folks to COVID-19. Health policy. Wearing masks is now, the Federal Reserve, of course, is now talking about wearing masks. Why? Because they want to see the spread slowing, because then people will have confidence to go back to their normal way of life, which means people will be spending. So even the Fed now is telling us to wear a mask. And by the way, you know, certainly I don't express the opinions for everyone, but I would just tell you, just wear a mask, be safe, and really for the interest of others, protect them as well. Let's talk about this then. Coronavirus is really what has been holding back the economy from going and getting a full recovery. So let's try to get through a little bit of the noise, because there's an awful lot of information that we're getting, but I don't think we're getting all of the information. I'm not suggesting the media is hiding anything. I just think that they only have so much time. But they're telling us about the cases. And in fact, again, if you look at this chart, the new test, they are up. We're now testing more people than we've ever tested. We have availability. We did not have tests back in March. Makes you wonder how many people got it back in March and just didn't get tested, because as we all now know, there are many people that get it and are asymptomatic, particularly younger people, right? But we are testing, which is a good thing, right? So people have access now. The new test cases are bringing now new cases to light at a record number. And we're also, which we're concerned with, starting to see a kick up in hospitalizations. But finally, as we look at deaths, the number of new deaths has not yet picked up. Now, there is a trailing death or a lag number, as we would think about it, where we actually test someone, they get considered confirmed with COVID. It takes time to get first to the hospital stage, and then the numbers are 14 days potentially to death, and then there's time between death and actually reporting a death. So we're probably a week or 2 weeks away from getting kind of a final picture on, are these new cases relationally going to turn into deaths at the rate that they did prior. Again, we believe because of the age issues, and we'll show you a chart here in a second, and we believe because of the treatment plans that are now in place, that we're actually not going to see as many deaths as we did early on in this process. We've given you overviews not only of the country, but we've given you overviews of every state. And certainly Florida has probably been the most popular conversation, because the number of cases there are on a tear and a record. And that would be particularly concerning. Again, if it wasn't, and it is concerning, but it is a virus, people are going to come in contact with it. It would be particularly concerning if the age groups weren't as young as they are right now, meaning if they were, of all of the older folks, still over 65, over 75. Of course, we know what the history is with those folks who get COVID-19 in terms of hospitalizations and, of course, deaths. So this is what we'll be watching. We'll be watching very closely. We'll bring you the information on an updated basis. Georgia, in fact, joining Florida, having more and more new cases, hospitalizations, just like Florida, on the rise. But then the death numbers in both Georgia and Florida are relatively, at least at this point, quiet in comparison to new cases and hospitalizations. So we should all pray that we continue with those trends. Amen, right? That's what we should do. So new cases, again, that is driving the headlines every single time I hear the media talk about it. The thing that I really am interested in is I'm interested in the severity, hospitalizations, and finally deaths, not just new cases. Because over time, we will get access to the point where all of us will get tested, right? So, and a lot of people will ultimately come in contact with it. And then it's just a question, are you, from an immunity standpoint, are you impacted such or not? And that really becomes the issue. And there's still a lot of questions as to why someone with certain profile health-wise and someone else fare differently. So that's where we are right now. The hospitalizations number, I think, is pretty interesting, because when you look at the middle of the chart, you'll see the black line, which represents kind of all hospitalizations, right? The overall number. And you see that number, it's higher, but it's not screaming higher. In some states it is, because it's just now gotten into the South. And so we're starting to see, of course, the growth there. But when you look at the national numbers, it's kind of flat at this point. It's going up a bit, but it is somewhat flat. And then when you look at the age groups, you actually see kind of where the numbers actually play themselves out. It has been true from the very beginning that older folks, specifically ones with other types of health issues, have been, in fact, hospitalized and ultimately have died more than others. Hospitalizations in general, interestingly enough, We are now below the typical rate of hospitalizations at this time of year for viruses, including COVID. So as you compare over the last couple of years, hospitalizations, our numbers today nationally, forget COVID for a minute, just in general on viruses, we're actually seeing numbers right now that are below the averages. So that's good news, of course, keeping our eye on COVID right now, because that's the focus that all of us have. Deaths, again, we've already talked about this. We saw them go to a peak, and that was back in April. And we've seen a substantial decline, like an upside down V, a victory, right, that's taken place. And we will hope and pray, again, join me, please, those that do, that we hold. And in fact, one data point that's very interesting, the number of deaths that get reported every single day in America, there's the why did someone die? The numbers for this COVID-19 have come down such that we're close to where it doesn't get called an epidemic. It's still a pandemic, but not an epidemic. So again, we'll hope that we go through those numbers, and as treatments continue to improve, that we will hope that we will wind up seeing just much better situation, because that is, in fact, necessary for us to get a full economic recovery. We cannot go back to business as usual until we get COVID-19 quieted down. And that's what we'll be working on doing, of course. One graph I do want to show you is the case demographics. I mentioned this a few minutes ago. I think it's really, really, really important, this particular graph. When you look at hospitalizations and then deaths, the hospitalizations are in orange, the deaths are in red, and the case confirms are in blue. So you see what's happening, which is the certain age class, 18 to 29, is growing fat. There's more cases there than any place else. And then just above that, we're starting to see the same thing. So when you see the number of cases in those particular age groups and you look backward and you say, well, when they had cases, we've had cases already to date, how many of those folks get hospitaled and how many die? Look at the graph and look at the orange lines. They increase as age increases, hospitalizations, and so does the red, which is in fact deaths. So to the extent that the average age of COVID confirms today is coming down, we think if history holds, there'll be fewer hospitalizations of the number of cases, okay? That means hospitalizations could be going up, but the number of cases are going up faster, and then deaths will actually be a much lower percentage as opposed to what we would have seen 3 and 4 months ago, particularly when this got loose in the nursing home community and the assisted living community. Of course, they did not fare well. And they still need to be very careful. I tell my dad on the regular at 82 years old, he's otherwise healthy, and my mom, you know, hey, listen, just stay in. There's no reason to go out at this stage. Let's get past it before you actually return to complete normal. So again, we've covered an awful lot of information about COVID-19. And if you want any of these slides, reach out to our marketing organization, SS Marketing, make a request. We'll get you the slides so that you yourself can get updated on the research that our team has been doing and continues to do, that really kind of gives a full picture as opposed to what we're just hearing in the media every day. Again, we believe and always have that this is a very serious, that is COVID-19 virus, particularly because we don't have a vaccine, particularly because our doctors have not treated it in the past. We think that over time, we will get a vaccine and we'll get better at treatments. And we think as long as all of us will be responsible, wear your mask, right? In the short run, we'll give our medical community the amount of time that it needs, and then we'll have the fewest amount of hospitalizations and death possible. Let's move the conversation to what we're watching. Well, what we're watching is housing have an extraordinary year. In the middle of this entire event, COVID-19, in the middle of this amazing economic happening, turning off the economy and turning it back on, housing has been just showing amazing resilience and amazing strength, and good for all of us. We should all be taking those opportunities, those blessings that we're receiving, making sure that we're giving back to those that are in need today, because there certainly are an awful lot of people in need today. because of many of the industries that have suffered. Let's take a look at our showing index. This is just, the precursor to contracts and closings. This is the demand. It's up across the board in the United States, 21.4% in May of 2020, 21.4. And we're seeing all of this data at our organization take place. I'll share a couple slides here in a minute. And the South is leading the crowd. So again, this recent, surge of cases in the South, let's just hope and pray that it doesn't quell people's interest to go out and to do what they wanted to do, which was to buy a home. What we're also watching is we're watching interest rates fall. That's a good news story, right? And I'm going to get to this detail just in a minute, but 30-year fixed rates are indeed at historic lows if you have a profile to be able to borrow that money at a historic low. It's still at all-time lows, interest rates, but it's not a one-size-fits-all type of deal. And we're going to get you that information in just a minute. Again, we've talked about the demand, mortgage demand. Well, in our business, there's two types of demand. There's demand to buy a home, a mortgage, and then there's demand to refinance a home. We're seeing both at all-time highs today. Demand for buying a home and demand for refinancing. It's actually because rates are down, and of course, we've had this resilience in housing. So rates being down has gotten the refinance community. Everyone that's out there that's not moving, that does have a home, can get a lower rate. Why wouldn't you get a lower rate? Save money, right? Of course, we're all for that. Let me share with you this. The demand for mortgages in our country, as strong as housing is, 61% of all the mortgages being produced today are being produced in the refinance sector of the mortgage industry. Of course, unless you're refinancing personally, that has nothing to do with you. And it has nothing to do with us because we work together on the purchase business. But the purchase mortgage business is only just under 40% of all the mortgages being produced today. And that means, you know what that means? That means a lot of our competitors are really busy focusing on easier transactions called refinances. They are, in fact, easier. Why? There's no buyers and sellers involved. There's no timing issues, like it's got to be there on this date at this time because the movers are coming kind of thing. Refinancing is at your leisure. So it's a much simpler transaction, and that's why many in the mortgage business will just opt to do those easier transactions during this kind of time. That's not what we do. So I want to show you a graph to confirm why you should look at Supreme as your source of support with your customers. And why is that? Because we focus all of our time, energy, and effort on working in your community, in the purchase community. Take a look at this. National averages, again, I mentioned 60% of all the loans are being done today in America are refinances. 40% of purchases. If you look at Supreme's numbers, 76% of our mortgages are purchases and only 24% refinances are past customers and friends and family. We're laser focused on all we do to support you. And that's why we think that we are the company that delivers the industry's best experience in a mortgage experience on a purchase transaction. It's because we focus on doing that because you are our partner. Let me share with you, I just said a few minutes ago that mortgage rates are at historic lows, and they are historic lows. It's a great story. But the other thing that happens is when you refer your customers, depending upon the profile of the transaction, there are what's called loan level price adjustments. Fannie Mae and Freddie Mac, who buy the mortgage debt in the country, all of it almost, FHA, VA, they all have price adjusters based on the profile of the customers. These price adjusters, meaning rates going higher, can be for credit score. They could be because you didn't put enough money down. You put the minimum down. For property type, condos charge a premium. We charge a premium to do a condo versus a single family detached. The loan amount could also create a LLPA. And then finally, occupancy status. If you're buying it to live in it, owner occupied, if you're buying it as a second home, or if you're buying it as an investor property, there are impacts. If it's primary versus investor, there is an impact on pricing. So let's just talk about that specifically. Let's meet the Smiths. The Smiths are a family. They're buying a $300,000 home, okay? They are going to borrow on a conventional 30-year fixed mortgage. That's C30. They put down 25%. Okay. They're buying single family, detached. They have an 800 FICO score, one of the higher ones that you can get. They have no loan level price adjustments. They can break the 3% number today. They can get a rate as low as 2 7/8. That's great. That's the Smith family. Let's meet the Jones family. They're buying right next door. Smith and Jones will be right on the same street. They're buying a $300,000 house as well. They're only putting 20% down versus 25%. Their FICO score is not 800, it's 700, which is about the average score. It is a single family detached, of course, because they're going to be living next to the Smiths, right? Well, they're not going to get the rate that the Smiths got, 2 7/8. They're going to get 3 3/8 because they put down 5% less and because of a 700 FICO. Now, listen, what's going to happen? The Jones and the Smiths are going to go to a barbecue someday together as neighbors to meet each other. And they're going to say, wow, we closed at the same time. What rate did you get? I got 2 7/8. I got 3 3/8. And they don't know why. We're telling you why right now. And we'll tell your customers why as well, so that they understand that the 2 7/8 is in fact the lowest in history. Well, so is 3 3/8, but they're not entitled to it because of the profile. Now, the Jones, same family, they like that house so much, they're going to buy an investor home. They want to invest some more money in real estate. We like these kind of folks, by the way, right? In this particular case, they put down 25%. This is an investor home. Single family, 700 FICO. Their rate is 4.99. So we went from 2 7/8 to 4.99. Why is that? Because it is a 700 credit score and an investor home. And those are the LLPAs, the loan level price adjustments, because of the FICO score and the combination of FICO and investment as opposed to owner occupant. That's the difference. Now, the Jones, they go buy now an investor condo. Well, they put down 20% versus 25%. It is a condo. They still have their 700 FICO score. Their rate went to 5.5. And why are we telling you all this today? Because we want to educate you so that you're better educated in serving with your customers. And when you refer Supreme, if they hear, wow, interest rates are at all-time low, and they were to find out they were putting down 10% or 5% instead of 25%, and we found out their credit score was 700, we can still close their loan, but their interest rate is going to be higher than the national media is reporting. And we simply want you to understand that. Why? Because as a professional consultant, the more we can educate you and the more that you can educate your customer, and the more we educate your customer, then we're all going to wind up having raving fans in the end, which is what all of us want, so that they all come back. That is, our customers bring their family and friends with them. Here we go. Let's move. I have a chart, and we've laid out this chart for all of you so you can kind of see about the various issues, LLPAs, and how they impact interest rates. Of course, this is unique to every customer, so it will, in fact, be a little bit different. Every customer's credit score will be a little bit different. Some of the other profile issues related to the transaction will be the same, like single family and otherwise. We want to give you a range of ideas so that at least you're familiar. Again, this is news you can use. All right, let's talk about credit again, because we have a great program right now. I want to give you some of the results that are taking place. Home buying, you can actually not get to buy a home if your credit score is not high enough. Generally today, at least 620 on an FHA loan is necessary. A lot of the big banks have gone to 700. So there are limits in some cases because of credit score. But there's also, as we just described, there's economic impact, substantial impact. The higher the credit score, the lower the interest rate. Well, we have a program we kicked off right around the time that COVID took place, because many people got their credit impacted in a negative way as a result of COVID, lost jobs, et cetera, et cetera. Well, Lisa Myers does a program, and Lisa's been doing it every Friday at 1 o'clock. And now we're moving it to Saturdays as well. In fact, we're going to be moving it to Wednesdays and Saturdays coming up here soon. It had been at Friday at 1. Based on all the feedback we're getting from customers who love the program, they're benefiting from the program. We also got feedback that more would come if we could get it outside of the workday. So we're going to do Wednesday evenings and Saturdays, just like your home buyer classes, so that customers will have availability to have multiple options. Now, let's take a look at what's happening to your customers when you refer them to Supreme and we get them engaged with Credit Essentials. We want you to know this because it's a massive benefit. We have, in fact, had 439 customers ask Lisa Myers, who we call now the Credit Whisperer, to give individual consult to a consumer about what they can do to improve their credit score. And the average credit score of those requests started out at 615, which would not get you qualified to buy a home. Guess what? They finish at 667. We're seeing around 50 points improvement. So if they come in at 700 and go to 750, their interest rate is going to come down materially and get closer to that all-time low, what you hear in the national media number, as opposed to when you're at 615, you won't get a loan. Go to 660, you'll get a loan, but the rate will be substantially higher. If we can get the scores up for all of your customers, we can bring the cost down. Isn't that a good news story? And isn't that news you can use? Take it to your customers. Tell them to go to Credit Essentials. Even if they have a really good credit score, they can get a better credit score, which not only will help them with their mortgage in terms of the cost, but it'll also help them on any credit card debt they have or any auto debt, because everyone is using credit scoring as a basis to charge interest rates in every industry today. So that's news you can use. Let's talk about our stats service-wise, okay? So I told you we focus on the purchase business. Why? Because we're marketing all of our energy and effort to you as our partners, the real estate community, and we want to be an expert at supporting and serving you and your customers. So I put up a couple statistics. 98.3% of our customers surveyed at closing tell us that they're happy. And by the way, we get back about 95% of our surveys because we do them at closing. So that's why we get such a high percentage, which makes this number statistically valid and relevant and important. And you should know then that you can trust Supreme with your treasure. That is your customer. Close on time, fund on time to get you paid on time, right? We want to make sure the customers get to move on time. It's one of the most stressful experiences ever in their life. That is moving. Exciting, yes. Moving day is not so exciting, right? So closing on time, getting the money there on time so the customers can move on time and that you can actually get paid on time. Can I get an amen for that? Of course I can. All right, and then finally, Supreme Speed. We normally close loans in around 21 days because that's what the contracts require, but we can go faster. In fact, we can go in 8 days. You cannot go any quicker than that because the government will not allow us to go quicker. But in most cases, we're open and up and available to put you in our race car and to get there in 8 days. Check with your loan officer and they'll let you know specific to a transaction that you might have, whether or not we can get that done for you. But we do an awful lot of work in less than 15 days. Let's put it that way. The average in the country is interesting, and I tell you often that I think they're making wine with these loans. 50 days. It doesn't take 50 days. Shouldn't take 50 days. But if you're inundated with refinances, it could take that long. So you have to have a center and a focus that says that these are our future customers, because if we don't take good care of your purchase customer, we won't have future referrals from you, which we desperately want and need. Anyway, again, our average is 21.93 to close a loan. The nation's average is 50 days to close a loan. And that's because we've got a really fast car. We designed it that way. Why? Because we want, when you represent buyers and there's 6, 7 people bidding a piece of property, we want your buyer to have every weapon. We want them to have higher credit score as a result of doing business with them. We want to have your buyer be able to put in their contract that we can get done in 8 days, 10 days, 15 days as a feature that may in fact sway the seller to take your contract instead of someone else's. So, that's what we're here to do. We want you to start with Supreme. That's what we want you to do. Tell your customers, start with Supreme. Don't start with Bank of, don't start with Sun. Oh, no, True. Start with Supreme. Why? Because you're going to be really satisfied at the end. We're going to get you closed on time so you can move on time and get you paid on time. And we're going to get your credit score up. And if you need to go in 8 days, we're going to put you in a really fast car and drive you there. We are grateful for all the support that you've given us in the past. We're grateful as we break records right now. We do so in light of our update today on everything that's happening with regards with COVID. We ask all of you to join us in praying that our medical field and all of those that are in it stay healthy, but more importantly, that they create breakthrough treatments so that we can get back to going to restaurants with our friends, so we can get back to getting on a plane and going to visit families, so we can get back to going to ball games this fall, so that we can get back to going to concerts and enjoying a way of life that's like no other. That's right here in the United States. And if all of us decide to be for everyone, even if we're not for everything, but if we still are for them, then we'll get this nation that's a bit divided right now, well, we'll get it back to being united. This has been News You Can Use.